everyone. I'm just going to go through day number 7 of the One Contract MES challenge. So this is the whole of Friday's price action. You can see market opened here and we were chopping throughout the night. There's a few little plays here that you could do. But then we had news drop at 8:30, which caused this big wick of this candle, and then we started to sell off. Now the first thing that you need to do is mark out your high. High of this would be market open, but we also had a high here. And we mark our lows. And the dotted line here is the lows of the pre-market session. Okay. You also want to mark out your order blocks that are recent to before you start trading. So we've got an order block here at the bottom. This red candle. And we've got an order block at the top. Like this. So what ended up happening, we've got liquidity here and we've got liquidity here. The highs are the liquidity, okay? So market opens up and you can see that the news candle swept the liquidity that was at the top and then started to sell off and swept the liquidity at the bottom. Now when that happens and you're in between two order blocks, it looks like it's going to be a choppy day. This is a big order block here and we've got a big order block here that looks like it's holding. So my thesis was always to take calls. The reason being, when you zoom out, we are bullish. As you can see, we're on a bullish trend. You can look at it on the one hour chart as well. You can see that we have been quite bullish since a week ago. Okay, plus the earnings came out yesterday of Google, etc., and it pushed the market up. So my thesis was to take calls. Okay, I was bullish on the market. So what I wanted to do was I wanted to get in, I wanted a bounce off this order block, which we did, and this liquidity got swept, and I wanted to get inside this order block here. Now on the way up there, we formed another order block, which was right here. But this one was still in the way. So what I did was, I took a position when we entered this order block. A tight stop loss just below. Market started to go up, started to hold, and then we started to come back down, and I got out here just to leave the trade in a positive, and that was, I closed this for £5. Okay. Once we came back down, right here, we went back up. I wish I'd held the trade. But then when this came down here and we double bottomed, I took another position as a call and we started to go up. And I got out right here. Only reason I exited the position was that I had stuff to do. However, if you had entered on this position here and your stop loss is below, you could have moved your stop loss like this. So market comes up, you've entered here, an order block is right here, this red candle. Now your stop loss is below, market bounces off it. If you didn't enter, you could enter here. Then market pushes past this red candle, your order block is now here. Market now creates another red candle and pushes, you move your stop loss to below here. Market continues to move, we get another red candle. Now your stop loss is here. We continue to push, 2 red candles and we push up. Now your stop loss is below here. But as you can see, we are struggling to get through, and we have a 2 p.m. rule. Get out of your positions at 2 p.m. and then this sell-off happened at 2 p.m. So that's how you could have maximized this trade. You'll see the two trades that I took. One was here and I got out here. The second one was here and I got out here. However, this 2 p.m. rule, okay, and it's happened every single day this week apart from Tuesday. Now, if we replay the candles at 2 p.m., okay, and this is why having a patient approach to the market is key. If you just took a position at 2 p.m., you would have benefited from a move down. Okay, you would have benefited from a move down. However, there's a fair value gap that's been created. Now, if you just waited for the fair value gap, you can see here that we've came and tapped this. There's a fair value gap here on the 1 hour, I believe, and then the market has changed direction. But if you'd waited for the fair value gap to get tapped like it has now, right here, and then took your puts, you'll see you would have got a bigger move. Also as well, you would have drawn this order block. Now the fair value gap actually gets manipulated, but as soon as it gets manipulated, we bounce straight back down. So that order block is there, created on the way down. Now you're just waiting for the fair value gap to get tapped, and you'll see it here. We've got an order block and a fair value gap inside. You just want the market to retrace. When you've got both these points of interest, one inside the other, it's very strong. Now, if you just, let's have a look at what you could have made right there. So let's say we're going to sell here on the tap, and then we go all the way down, and you'll see that you would have closed on £43 on one contract. Okay, so that was my two trades. The total right now is at 841.75. So hopefully by next week or the middle of the following week, we will have the evaluation done.